what's up everybody? It is Tuesday, August 18th. New record high in the S&P. And we're going to keep going. I mean, all the trends remain the same, and I'm speaking about the fiscal flows, record fiscal flows. There's been no deceleration in those flows whatsoever. Even with the cutback in the unemployment benefits, spending is just continuing to expand. The year-over-year differential now is at the widest it has ever been. So, I mean, you know, that's like a tsunami of spending. Yes, it isn't going equally out to the economy. Yes, it's being very concentrated. Yes, only a handful of companies have shown to be beneficiaries of this spending. We just saw two more today, which were Home Depot and Walmart, benefiting from the stay-at-home situation that we have here and really like throughout the world. So that's the name of the game. I mean, the market averages are being influenced and really dominated by these large mega cap companies, and they're just pulling up the averages, and it's just going to keep going. I think it's going to keep going. I mean, there's no risk for a correction until you got to keep your eye on that weekly AAII sentiment survey. You know, individual investors have been bearish through this entire thing. At some point, they're going to flip around and get bullish, and I think that would mark an extreme level of sentiment, and then we could probably see a correction. And who knows? There might be some catalyst that comes along with that. You know, Trump and China. I mean, the election, possibly it could happen then, right? Trump loses, I don't know, but right now, tsunami of spending, and market's just going to keep going up. And the leading companies, we're talking about Amazon, Apple, Microsoft, Facebook, Tesla now, Nvidia, right? All these companies, Walmart now, Home Depot, they're going to continue to benefit. But I do like the banks in here. I think they are tremendously undervalued. And I think that's an opportunity. All right, gold back over 2,000 today. One thing we saw, and I think I mentioned this yesterday, I may have mentioned this, I don't know, was in last week's correction in the gold market. That day we were down $100. Commercials, that are producers, gold producers, they were using that as an opportunity to buy back their shorts, to cover their hedges. So that was a bullish sign right there. Same thing with silver. We saw that happen. Dollar hits a new 2-year low today. I've been saying the dollar's trend is down. Those are the fundamentals. Yes, we've been through a 2-year counter trend rally. That is all unraveling now, as I said it would. And I've been short the dollar the entire time, and the position is doing very, very well. Hey, if you've seen personal savings, this is interesting because personal savings during the pandemic shot up to a record. I mean, really shot up to over 6 trillion. I mean, that is so above any historic level that we have seen. Now, it's come down a bit to 3.4 trillion because we had to pay taxes back in July. But, you know, I was listening to Neel Kashkari, and some of you may know who he is. He's the president of the Minneapolis Fed, and he was saying, like, you know, it's great because we're not going out to restaurants and movies, so the spending, I mean, the savings has gone through the roof. No, I mean, yeah, it's true, we're not going to restaurants and movies as we did before, but that's not in any way an explanation of why personal savings shot to the moon. It has to do with the fact that government spending and deficit spending added to the financial balances of the non-government in an unprecedented way, just like the deficit is at an unprecedented high, at least a nominal high. The only way we can increase savings is not by simply not going to restaurants and movie theaters, and that whole premise is ludicrous because, you know, that just reduces, if I don't go to a restaurant or a movie theater, that just reduces the income and the savings of the restaurant owner and the movie theater owner. All right, that's the paradox of thrift. the government has to spend more than it takes away from us in taxes, and that's exactly what happened with all the stimulus checks and all the unemployment benefits and all the massive spending. That's what blew savings through the roof. That's what blew savings through the roof. And it's crazy when I hear a guy who happens to be the president of a Federal Reserve Bank saying stuff that is completely false and completely ridiculous. But look, I should be used to this by now, because this type of ignorance and this type of misinformation is pervasive. It's always out there. They don't get it. I mean, it's ridiculous. It's ridiculous. It really is. So savings still at a very high level, and savings does not come from non-consumption, because again, my non-consumption equals somebody else's loss of income and savings. Savings of the non-government, that's us, we're not the government, comes from dissaving on the part of the government. In other words, when the government spends more than it takes away from us in taxes. And in this case, over this pandemic, it has spent an historic amount. I've been talking about this the whole entire time, and that's why savings are up. MMT concept. That's an MMT concept. It should be easy to understand, but I guess most people, they don't understand it. Neil Kashkari certainly doesn't. All right, everybody, that's it for today. Go to my website, pitbulleconomics.com. I recorded a new podcast today. It'll be out tomorrow, so check it out. I'll remind you. Have a great evening. Bye-bye.